Hi all, welcome to my channel Satish Vlogs. In this video, I would be explaining the concept of a sales returns. What is the sales returns? What are the journal entries when the sales returns are made? How these sales returns are supposed to be reported in financial statements? All these details I would be explaining in this video. With this introduction, now let's move to the next slide of my PPT. In this slide, there is a diagram which depicts like a cycle. This is nothing but an accounting cycle. What is an accounting cycle? What are the various phases of an accounting cycle? All those details I had already provided in my previous video on accounting cycle. And also, these sales returns are related to or pertains to the sales, right? So for that reason, details related to the sale of goods or services on cash or credit, details regarding to this concept were already been shared in my video. Okay, and I would be providing the links for these two videos in the below box. Request the viewers to go through the details of those two videos before getting into the details of the current video in order to gain better understanding of the current concept on sales returns. As mentioned, I would be explaining my concepts considering the phases of an accounting cycle. As a first phase, which is a business transaction, my business transaction is sales returns. Okay, in which circumstances the business entity would end up in receiving the inventory back from our buyers. There could be possibility that the defectives might got delivered at the inception when the sales were made, or if there were any rejected pieces were sold out by our sales department to our buyers or customers, or if the sales are not up to the mark as per the conditions which are being predefined by the buyer, then in such a case our business entity might expect the sales returns from our buyers, right? So whatever the returns which are being received, we need to treat them as a sales returns. So with this, I hope the viewers are able to understand what the sales returns are all about. Now let's move to the next phase of an accounting cycle, which is a journalizing phase. What is this phase all about? For whatever the business transaction for which the journal entries are supposed to be recorded, right? So what is the sales returns are about? The business entity would receive back the goods which were sold inceptionally or initially, right? So when the goods are sold on cash, then in such a case our business entity is supposed to refund back the cash to the extent of the sales returns which are being made by the buyer, right? When the sales are made initially, then what would be the entry we might have already made? We might have made bank account data to sales if the sales were made on cash basis. Then now, as we have been receiving back our inventory, then in such a case we need to reduce our cash sales to the extent of the returns we have received now. So which means our sales is supposed to be reversed out to the extent of the sales returns we have received now. Sales account data to bank, right? If the sales were made on cash basis and the returns would be receiving now. Okay. However, where the sales were made on a credit basis and we would be end up in receiving the sales returns now, then in such a case we might have debited our sundry debtors or accounts receivable account, right? And we might have given credit to sales account. Now we need to reduce our sales to the extent of the sales returns which are being made by our buyer, right? So which means the sales needs to be reduced, which means the we might have initially credited our sales account. Now we need to debit our sales account in order to reduce our sales to the extent of the sales returns we have received now. So sales account debtor to sundry debtors are accounts receivable, right? Hope the viewers are clear how the journal entries are supposed to be made for sales returns. Now let's move to the third phase of an accounting cycle, which is ledger postings phase, right? So what is this phase all about? For whatever the journal entries which were recorded as part of journalizing phase, for which the ledger accounts are supposed to be created and the postings need to be done or entries needs to be posted accordingly, right? Yeah. So we might have already created the sales account and bank account and sundry debtors account, right? Now we are receiving back our goods as a sales returns from our customers, right? So we need to reduce our sales to the extent of the sales returns we have received now, which means we need to adjust our sales, right? So basis on the entries we have made as part of the journalizing phase, those entries are supposed to be posted in the respective ledger accounts. Hope this is clear. Now let's move to the fourth phase of an accounting cycle, which is a trial balance phase. What is this phase all about? For whatever this trial balance is nothing but the summary of the balances of the ledger account. So as the balances against sales, bank, and even the sundry debtors are already available, whatever the balances which are getting reflected as part of the ledger accounts, those balances are supposed to be updated in the trial balance, right? So the balances which are shown under the debit side of the trial balance should matches up with the balances which are shown under credit side of the trial balance, because as we have been following double entry system of bookkeeping, there shouldn't be any discrepancy in balances, and the debits should tie back with the amounts which are shown on the credit side. Okay, with this let's move to the last phase of an accounting cycle, which is a financial statements phase. The critical statements of the financial statements are, one is the income statement and the other one is the balance sheet. Okay, so as mentioned already, we need to adjust our sales, right? Which means it might impact our income statement, right? We might have initially credited our sales in the income statement. Now as we are receiving back our goods which were already sold in the past, right? Now we need to reduce our sales to the extent of the sales returns we would be receiving now, right? Yeah. So adjust the amount accordingly. And in the balance sheet, the balances against the bank account and the sundry debtors accounts are required to be updated, and we would be updating the details in the financial statements as per the balances which are available in the trail balance, right? Yeah. With this, I hope the viewers are able to understand what these sales returns all about, in which circumstances normally the sales returns would happen, and what are the journal entries when in case of the sales returns, how the sales returns are supposed to be reported in financial statements, all these details. Okay, if the viewers like this video, request you to like it, share it to your friends, and subscribe my channel for more videos. Thanks for watching. Catch you in the next video.